Let me just introduce a little bit about Derreck. He's going to be talking about tax-free wealth building strategies. Great, great topic. So Derreck is the senior IRA specialist at Quest Trust Company. He has extensive experience investing in notes on short-term flips to long-term real estate notes. Derreck helps educate Quest clients on how to invest in real estate tax-free. So take it away.
Well, thank you so much, Jamie. So I always tell people taxes are the most boring thing to talk about, right? So knowing that they're so boring to kind of go through and things, usually what ends up happening is I'll put people to sleep. So I'm going to do my best to keep this exciting, but I think it's very important to understand because we as investors can never avoid taxes 100%. So I'm going to do my best to walk us through how we can do some deals. And there's some unique entity structures that we can leverage and utilize to avoid taxes on whether it's a rental, a fix and flip. It doesn't matter. So that's kind of what I'm going to be going through today, right? And let's see, bloop, there's my screen. So I like to call this growing real estate investments tax-free. As we kind of go through these motions, if you have any questions, put them right there in the chat box. I'll answer them live right away. And I only have about 20 minutes, so I'm going to be going a little fast through this first portion. But ultimately, if you want these slides or if you do have questions, just let me know. So as always, every company I think out there today has had some sort of disclaimer, right? Hey, I'm only here for your education. I can't give you investment advice, legal advice, structuring advice, nothing along those lines. This is strictly for your guys' personal education, okay? So we're going to start off with everyone has kind of mentioned a brief aspect about themselves. So I'm actually not from Texas. I went to college out in Arizona. I also got a degree in global marketing and a minor in administration. I spent time in the Army as a what they call a 15 Yankee, which is a fancy way of saying an Apache mechanic, right? So I wasn't a big fan of the Army, though. To be honest, the pay sucked. It really, really did. And I always had like this entrepreneur type spirit. So I was looking for something different. So after college and after the Army, I kind of found real estate and I've been loving it ever since. So I want to start off and I want to really talk about the two types of entities in the eyes of the IRS, because there's only two types out there. One is a taxable entity, right? And we're very familiar with taxable entities, but that means the other one is going to be a non-taxable entity. And believe it or not, everyone out there can set up both of these types of entities. Now, we're very familiar with the taxable side. This is typically going to be you. You work a job, you're W-2, you set up an LLC, a C Corp, S Corp, a trust, something like that, right? And anytime you make profit, you make money in this column right here, you have to pay your taxes on your profit, right? Common sense, we get that. But there's non-taxable entities. Now, normally when I say this, the first thing that comes to people's mind is going to be a church, a charity, a nonprofit organization, sometimes hospitals, right? And yes, all of those can be considered non-taxable entities. But there's other ones out there as well that people don't realize. Things like an IRA, a solo 401k, a QRP plan. And these are things that Quest can actually set up for you for virtually almost sometimes nothing, up to $100 to set up an IRA. So believe it or not, we can help you set up a non-taxable entity for $100. So let's then kind of walk through what this is. And most people will call it a self-directed IRA. But what is a self-directed IRA? You ever hear this term, guys? It is 100% a marketing term, okay? Come on. There it goes. Slides are going slow. So it's really just a marketing term. Right? There is no such thing as a self-directed IRA. It comes down to the bank or the custodian that holds your retirement account. Most of us out there, we have a retirement account sitting at a Fidelity, a Charles Schwab, a Vanguard. And if they call it self-directed, it means you get to choose your public assets, stocks, bonds, annuities, CDs, etc. When you take that same account, that same retirement account, you move it to us, we will let you invest in private assets. Now, for everyone on here, this is going to probably be real estate related. Rentals, notes, syndications, Airbnbs, B&Bs, fix and flips, etc. I tell people all the time, there's not one that's better than the other. They're just different. Okay, so just remember, self-directed is a marketing term, right, that we leverage and utilize. So now that I know it's a marketing term, what plans can be self-directed, right? And what are a lot of the benefits that come with it? The first one being diversification. Most of us out there have a 401k, 403b, a pension plan, an IRA, something like that, and we feel like it's diversified because I have it in Fortune 500 stocks. But that's all public assets. Well, I have Fortune 500 stocks, large caps, and mutual funds. Once again, all public assets. I say let's take a portion of those funds, move it to a custodian like us, and allow us to help you invest in real estate with it. Remember, we can use those 401ks, we can use those IRAs, and instead of buying stocks, you can use it and purchase a property, right? Well, the biggest reason, though, we want to leverage one of these self-directed accounts, though, is going to be the tax savings. And I'm going to show you some examples about it here in just a little bit. But mainly, if I set up an IRA, I set up a 401k, I set up something along these lines, well, what ends up happening is if I do a fix and flip, remember, if I do this personally and I make 10 grand, I pay taxes on my 10 grand. But if I could do that same fix and flip, leveraging my retirement account, none of the profit is taxed today. And if you have the right account, like a Roth, an HSA, or an ESA, right, then it truly is tax-free. So this is what's nice to hear, what's nice to know, is all the deals that every single person out there is already doing, you can be using your retirement account and avoiding 100% of the taxation. This is the real key behind leveraging a self-directed account. And it's crazy to see how many people don't do it. They don't get started. There is something else that I always like to talk about, though, and I like to label it as investing in what you know best. Most of us out there have probably worked some sort of job for 10, 15, 20 years, and you have that old 401k, you have that pension plan, that 457, 403b, whatever it is. For me, it was the Army. I had a TSP. And I go, well, what's it invested in? Right now, if I asked every person out there, what is your 401k invested in? I usually get, oh, right? You have no idea. Why? Well, it's because you're not investing it. Now, you're right now attending one of the best real estate events, right, out there for everyone here, especially if you're in Texas. So why don't we take your 401k and invest in what you want to invest in? Invest in what you know best. Chris and Jamie have done a fantastic job bringing in speakers from across the U.S. right now to make sure that they can educate you on what real estate investments can do for you. So take advantage of that. Leverage those 401ks, leverage those IRAs and use them. And instead of buying mutual funds or stocks or CDs or something along those lines, let's use those funds and let it help you do your fix and flip. Let it help you purchase that Airbnb, do that rental property, or invest into that syndication. All right. Now, there's all types of plans that can be self-directed. I'm just going to bring them all up here real fast just because I know we're always going to be limited on time. But the most popular ones seem to be those personal plans, a traditional and Roth IRA. I think the traditional IRA is probably our number one account we always see. This is because your old 401ks or 457s will turn into a traditional IRA. Now, this is called tax deferred. I get to defer my taxes until I'm old. These are great accounts because it means you don't have to pay any taxes today. However, if you're someone out there that really wants to grow an acorn into a big old tree, you need to leverage a Roth IRA. Now, the Roth IRA is not for everybody. Right? A lot of people will probably never set up one or leverage one in their entire lifetime. But it's a great way to grow true tax-free wealth and pass on wealth to the next generation. All right. Now, we do have some employer plans, SEP Simples, Roth 401ks, solo 401ks, etc. These accounts are typically utilized for large contributions and large tax deductions, right? As an example, with the SEP IRA, I can contribute up to $58,000 in there and take that as a tax deduction. This is important to understand because right now we're getting ready all for us to come into the tax season where we're going to file our taxes. We're going to be sitting at our 1099s and our W-2s or Schedule Cs. Well, maybe you might need some extra tax deductions. And if you're self-employed or a realtor, you can leverage a SEP IRA and contribute up to 25% of your income, no more than $58,000, and take that as a tax deduction. That's huge for most of us out there. There are some specialty plans that Coverdell ESA account, which is really for you to set up for your kids to help them pay for school, kindergarten through college, or the HSA account, which is a great account that allows people to go ahead and set up an HSA and pretty much cover their medical expenses. once again, Quest, we can set up any one of these accounts to kind of walk you through and help you in the process. Now, as I kind of come through, I wanted to do one really brief example. And let's say you're doing a fix and flip. Okay. I put up some numbers up here. This was a most recent deal that I kind of did personally. But I found a house. We bought it for 130. The rehab was about 40,000 and the ARV was 250,000. Right? Not a bad little deal. I consider 40,000 a little bit intensive on the rehab, but it is what it is. So you have two options once you found this house. Option one, remember, buy it in the taxable entity, meaning funds come from your pocket. Funds come from your LLC. Funds come from you as an individual. You're buying it in your name, your LLC, or any other entity you might establish. All right. So remember, these are taxable entities. This isn't bad, but this is option one. So if we kind of go through the numbers, don't forget that any profit we make is not true profit yet, right? I said we bought it for, buying plus rehab, 170, about 10,000 in closing. That's pretty average. So that's 180,000. Subtract that from the 250, assuming we just did a minor fix and flip on it. Okay. That means we're going to make about 70K in profit before taxes. Now, granted, we do get to take some tax deductions along the way, but ultimately any of our profit's going to be subject to either capital gains tax. It could be personal income tax, right? And these are things that people forget. The capital gains tax is almost 20%, meaning no matter what profit I make in this example, 20% of it is probably going to go to the IRS. Well, that's obnoxious. I like to keep as much money in my pocket as possible. So what's the other option we have, right? Oh, and don't forget about the reporting. Whew, you got to do all your reporting in this aspect as well. Not a big deal, but this is why we hire CPAs. The other option we have, though, is actually leveraging one of those retirement accounts, the Roth IRA, traditional IRA, your 401k, etc. Okay? Remember, the retirement account would purchase the property. It's not buying your name, you're buying it in the name of your IRA. Right? This means that, remember, your IRA is a true tax exempt entity. That's how the IRS labels it. Well, if they're going to label it as tax exempt, right, this means that you have zero taxes on the earnings today. If it's the right account, like a Roth IRA, it's truly tax-free for the rest of your life and an additional 10 years after you pass. This also means you have more money to reinvest. If I don't have to pay taxes, well, now I have more money for my next deal. This is a huge advantage, right? And then the final thing I always want someone to consider is if I look in your bank accounts right now, do you have more money in your checking account or more money in your retirement account? Most of us have more money in that 401k or that IRA because that's where we've been shoveling away money for years, sometimes decades. All right, so take that into consideration. We want to leverage these retirement accounts to purchase real tangible assets, not paper assets. That way we can earn money tax-free and kind of grow it. So ultimately, guys, if you do have any questions, please feel free to reach out to us. You can give us a call at any point in time. You can email me directly. This email comes to my phone like a text message. And the phone number you see there on the screen is also non-automated. I think it's really unique and very important that Quest, we stick with a non-automated system strictly because we want to make sure clients out there can get a hold of us very easily. Also, I know we have a lot of realtors on here. So what I just went over is a very quick, brief, small overview of self-directed IRAs. So Quest, we're hosting for any realtors out there a free 3-hour online CE class, all right? So it's going to be on February 10th. It's 100% free for you guys. You get your credits then that you need. And we're going to dive into deep a lot of other things from setting up the accounts, entity structures, tax deductions that you might be taking, that type of stuff. So once again, this is 100% free to you guys. And if you did want to reach out to me, send me an email. Just go to questtrust.com. And I know Chris is down there putting things out that way. So, but that's pretty much what I have, Chris. So I try to keep it right to the 20 minutes and bam. You're still muted though too, big guy. Nope, Chris still muted. Chris, you're muted.
Yeah, I'm new at this thing. I've never done this before.
You're good.
So yeah, I mean, I've been to all those events where y'all had multiple like two-day like full weekend boot camps and summits before. So I know everything that you talked about. Like pretty much any slide that you had is a 3-hour deep dive if you had the time allotted. So fitting that into 20 minutes is not easy.
Not at all.
But you're definitely able to help a lot of folks get the information that they need, because there are a lot of folks out there that they sincerely. I see TikToks on this, and then when I'm reading the comments, and they're like, "No, you can't do that. That's not possible." Blah blah blah. And it's just they just don't know that they've been taught otherwise, and it's new information. Therefore, it's just unknown to them, and that's why I love putting the information out that you just shared, and then just Quest Trust Company in general, and all the other stuff y'all do. Y'all are such a leader in educating this community. And then you also happen to provide a pretty good service too.
Well, thank you, Chris.
Yeah.
We love you guys. You and your wife have been client of ours for years. Man, I miss sponsoring guys events out there in Sugar Land, all the way down at Rudy's. And
I know. Don't you miss the barbecue?
Right, of course. So, but you guys have always been helpful, not just to us, but I'm sure just in general to the entire community. So thank you to that. If you guys ever need anything, let me know. So
Absolutely. Well, appreciate you, appreciate Quest, and so anyone that wants to check out the free CE class, realtors, you need CE, like check it out. It's free. Thank you so much, Derek.
bye,
Thanks,
guys.
Derek. You're awesome.